Hello, everyone. Thank you for joining us for this edition of the W Conversation, a program under the W Initiative Access Bank's Women's Banking Proposition. Our goal is to inspire, connect, and empower women across all segments, the professional woman, a woman in business, and the homemakers as well. Today's conversation is around village banking and investment groups, and I know a lot of us out there are part of some kind of savings group. Some of us are involved in Chilimba, others are involved in village banking, and I know that there's quite a number that have taken village banking to the next level and actually getting together for investment projects. So we're just going to discuss the various concepts and how they're impacting women and how we as women can get together and make the right choices and take into account the different risks, if any, that are associated with this form of pooling for investments and savings. Today, I'm joined by two lovely ladies. I have Veronica Musukwa, our head of retail products. We also have Jessie Pelilenyurenda. Jessie is an SME consultant under Satori Consultancy, and they are specialized in linking SMEs, helping you access finance and offering advisory services. So we'll be hearing from her as an expert in this field. And I know that she's done quite a lot of work with women in the rural areas, but it doesn't stop us from learning what is happening in the rural areas and adapting to the bulk of possibly the viewers that are actually based within the urban regions. Let's get straight into it. Jessie, could you start off the conversation with basically explaining what village banking or investment groups are and how they basically would function? Something that I know about in terms of the history of village banking is they actually started off from the village concept. Could you just give us a breakdown? I know some people don't really know how this works, and this is an opportunity for them to understand the concept.
Yes. So essentially, village banking or savings groups are community-based financial systems that came about to promote access to savings, access to credit within the group, and also linkages to other financial products, could be insurance, and so on and so forth. So the main objective is how women as a community can empower themselves to progress. And with time, of course, this has evolved somewhat to include what in the urban areas now we call investment groups. Yeah. So essentially village banking, you have a group of maybe say 20 to 30 women who sit down and agree on minimum and maximum contribution to make periodically. It could be weekly, it could be monthly. And then from there, that pool of savings is then used to on-lend within the group for a specific purpose. Why it works in the community is because they all live within the same community, they all know each other, they know who lives and what business venture they want to venture into. So the key step of setting up a village banking is self-selection. So you need to ensure that there is cohesion within the group. They all have the same purpose. They want to achieve, to promote each other and to help each other. And they actually do establish bylaws or like a constitution, which basically guides them right down from who can we accept as a member, right up to selecting the leadership within the group, because you have like a chairperson, treasurer, and so on. So the key leaders who will be guiding the group. And then also there are issues to do with, at some point somebody may want to exit, or if they're not abiding by the rules, what are the exit plans for that individual? So it sounds complex, but it has worked because within every society, within every community, there are rules that help stimulate them to progress. Yeah. So like with that now in place, we have seen in urban areas where we now have like investment groups which have borrowed from similar principles. So then I know that Kalumbo and I are aligned, Veronica and I are aligned. We are within the similar income bracket. We're able to save up to similar values in terms of money. So you won't have someone, it may appear like you're excluding certain income brackets from your savings group, but there is a purpose. Because if one is able to save, say, for example, 10,000 kwacha a month, whereas the other one is only able to save 200 kwacha a month, you see that
the goals are different.
The goals are different. The purpose is different. What they aim to achieve is different. So at that point, if you exclude that person, it doesn't mean that it's discrimination. No, it means that you are vying for something that is different. And that's what we need to accept.
Just the way you mentioned to say the objective, I don't know what your experience is, Veronica, if you're in any of these groups. Do we actually sit and say we are saving for this or for this specific goal? Because I have borrowed money to go on holiday. Mm-hmm. I have borrowed money because I wanted to get a washing machine replaced. So my needs have varied. Would that constitute deviating from an agreed objective, or is not having a specific objective an agreement in itself?
I think it's mixed. It's a mix, really. If you look at the village banking as she's explained it, I mean the one where we do investments, primarily investments. I was in a group where we're doing just the usual borrowing and savings, and others. I remember there was a cycle. I did it like for 2 years. There was a cycle where in 1 month, someone wanted to borrow about 150,000, and she had been on the list, and I think missed a few months. We couldn't give her because there were others, so it was like a backlog. So she wanted to borrow, and I remember in that month, everyone was sending to her, and I remember engaging the chairperson and said, how sure are we? The risk is too high here, whereby everyone's savings are going to this one because she wants to borrow 150. So the issue of the objectives, they are different. Others would save because they want to buy a washing machine. I've seen others where they want to do up their kitchen. They are in the saving. Their goal is to make over their kitchen. Others, they want to travel. So the objectives might be that, okay, we are like-minded people, we want to save, and then our goals will vary, but ultimately we know that in this group, this is what we're trying to do. In the one that I'm in right now, our objective is to invest, purely investments. As to the motivation, of course, in village banking, we know that the motivation is savings, ultimately. In those savings, what do you want to do with those savings? I think that's a distinguishing factor. So others would do different things, investments. Others would do, want to go on a holiday. You want to buy yourself a good, like you said, washing machine, something in the house. So it's really around having like-minded people, focusing on what your goal is individually, as long as you are able to have a group of people that you trust. It's really around trust issues.
Jessie, in your experience, what are some of the key benefits that savings groups, investment groups are bringing out? Would you have any specific examples that we can reference? Maybe what has worked in your experiences around interacting with women in the rural areas? I ask this question because I'm just wondering, why can't I save on my own? Why haven't I been consistent in placing money in an account every month? Why do I have to wait to get in a group for me to attain this goal?
Yeah, that's a very good question. I mean, you can do it as an individual, but there's just something about having the community involved. I'll give an example. In the formal financial sector, you come to Access Bank and you apply for a loan or a facility. And so one of the key questions that they'll ask you is, do you have a board in place? And as an SME, or, you start wondering, what is this? I've got everything in place, it makes sense. But there is a reason why they ask for that, because the board has key experts in different fields who will ask those questions that you would rather not be asked, or you may not even be aware of. So similarly, you'll find that even in village banking or investment groups, you have a safe space, because one, that is their money, right? So they want to protect their money to ensure that you're able to pay back. So they'll ask you that question, okay, so you want to borrow this, you want to go to China and buy Brazilian hair. How much is it going to cost you to go there? Do you have clients who come and pay? Will those clients be able to pay? So even in rural areas, it's the same thing. So I'll give an example of Access Bank's presence in Polongo. We're actually training several groups of women who have savings groups, and now they're having solar hubs that they'll be using to refrigerate the Kapenta along so they're involved in the entire Kapenta value chain. So you've seen that they have now grown from just little bits of savings into now an investment group with the core purpose of providing solutions to the community. So imagine if some of the members were for the idea to say, no, at share out, let's just share all the profit that we've made. Then they would have just been growing as individuals, and they would not be able to invest into something of that size. So for me, I think that is something that, shows like the purpose of village banking. It has moved us now from working as individuals into now the formalized structures that you as financial institutions are looking for, to say, so now they can go and register themselves as a cooperative. Do they have a board in place? Yes. Do they know how to make key decisions? Yes. If now they want to have a chain of storage facilities, their savings will not be able to raise that capital. So what's the next step? Then they go to Access Bank. So for me, this is the growth trajectory that I have seen happen in the rural areas.
The misconceptions. I was going to say, what misconceptions exist around women working together in financial settings, and how do you feel these must be addressed, or how they have been addressed, if at all?
The misconceptions that are there: women don't trust each other, women are always competing with each other, women can't work together, they're always gossiping. The competition aspect is you chase after everything. You can't have everything. You can't have it all, but you can't get everything that everyone has. We are all at different stages in life. So I look at the narrative about women not working together is something that we can definitely diffuse by being able to have a better way of managing resources or managing ourselves, to be able to give ourselves a benefit that would last beyond just these small groups of women, and be able to make an impact, because it really drives home the issue of how is money helping us, because someone is looking at money from a perspective of, I need to beat the next person, I need to have a better car than the other person. But really, you have to have your own goals, your own personal goals. How you arrive at them, what I will achieve will be different from what you achieve. But ultimately, we should all be happy with what you have. So the content part comes in, trust issues come in, building trust, being comfortable, being enough with what you have. And also knowing the season in which you are in. You might be in a different phase. We are working in the same office, we're on the same village bank, but our lives are taking a different shape. We're managing. There are times when maybe someone is managing a patient in the family. Your response to how you use money will be different at that time of life. You may be a nursing mother, and how your expenditure is different from someone who's got children in university. So I think those things where you want to beat the other person just because you think we are at the same level. We are different in whatever we are managing. So that should be able to settle us as women and just be able to help us work together for different goals, but we are building each other. And that's how I believe in it.
Thanks so much. Thanks so much for that, Jessie. And I think it also ties into what Veronica has just spoken to. But what in your line of work, what do you think are the main challenges that women have when setting up these groups, and how can we overcome them?
I think like you've said, the first thing is at the formation stage when we're selecting the members of the groups. And like Veronica was talking about, you need to also understand at which stage in their life they're at. Are there any bereavements? Are they in full-time employment? So it's basically kind of like KYC on the membership. Yeah. So also, then the other thing is, like I mentioned also, the income brackets in which you are at. So if you want to then go and borrow, then you say, I'm going to save so much, like, a huge amount of money so that you can borrow everything. Then that would deprive of other members of the group from saving, because your ratio is, say, 3 times, you've saved up to maybe 30,000 kwacha times 3, that's 90,000. And you've almost wiped out the entire pool because the others are only saving maybe 100 or 500 kwachas. So the principle of village banking says that the ratio shouldn't be more than 1 to 10, which means the highest saver should not be more than 10 times the lowest saver. So if you are saving 100 kwacha as the minimum, then the maximum should be not more than 1,000 kwacha. So you won't have a situation someone will say, after all, if it wasn't for my savings, this thing won't be there, because that is not part of the principle. Yes. And then also there are issues to do with the social fund. Social fund is there, you contribute it in case you agree as a group to say, in case somebody is unwell or there is a bereavement and so on. But this is a minimal amount. So you find that maybe 1 or 2 people claim the social fund and then it's depleted. So now to overcome that challenge so that others don't feel excluded in the event of something unforeseen happens, that's where the insurance kicks in. So as a group, you then say, okay, from what I understand, there is this bank that is offering this kind of insurance product embedded in it.
There's Access Bank for insurance.
There we go.
So anybody out there, your savings groups, we've got a family protection plan.
Yeah.
That you can cover up to 20 people. So see us for that.
So exactly. So you see how now formalized financial institutions can work with savings groups, because initially there was this thing, but why is Access Bank, trying to talk about savings group? Isn't that a competition and so on? You create synergy. Yes. Access Bank cannot be everywhere at the same time, so you create that platform that will make it smoother for the savings groups.
Can we talk about the tools that are available for us to manage any excess funds, for example? And I think, Veronica, this is where your products come in. What tools do we have, or would we be able to encourage groups that have excess funds, or whether just for the process of making sure that transfers are done? I need you to convince the ladies out there what Access Bank has as solutions to manage excess, to manage your transfers and the like.
Okay. So with Access Bank, we have, we've made it very easy. The way the village banking concept works, where you have a pool, usually the traditional one, there's someone who has a box where you take, and then
the key.
And the key.
2 keys, your control.
Yes.
3 now.
3 now.
3 keys, and the money is taken, they put it there, the excess and whatnot. So we've digitized it rather. So with the Tenga mobile wallet, you have to have a group savings account, and all the beneficiaries are mapped to that group savings account on Tenga. So you can actually do your savings into that pool account the same way you would send money to the pool. And in that, from the pool, then those that want to borrow, funds are sent to their individual wallet accounts. So there's a trail. You're keeping record of that. And even for those that would want to pay in before time, you can do that. Anytime you want to send money to the pool, you can actually do that. So everything around digital, village banking has been digitized.
Yeah.
It's been made easy. You keep a record. You can actually borrow, and then, like you say, where someone doesn't want to borrow, you can't force them. They're able to get interest. And the account itself generates interest. I would encourage women out there, instead of having the risk of keeping money with, and it's the same concept, administrators have to approve for you to borrow. Yeah. So there are 3 that have to, depending on your constitution, you approve the ones, so this one will approve, the second person, and then the funds are released to the next person who wants to borrow. When you're making a repayment, it's the same. So it's the same village banking concept, but digitized.
I'm very excited. This has been a very interesting conversation, eye-opening, listening to your experiences. Obviously, we always have to look at these interactions as one, what is the inspiration? What is the connection? And how are we empowering the woman out there? And this is what the W initiative is all about. And thank you so much, Jessie, for making time. Veronica, I need to be on that Tenga group savings.
You should.
I need to be a direct beneficiary. Do you have any last words before we?
Yeah, thank you so much. I mean, I've been banking with the bank from the time it was Finance Bank. Yeah, over 15 years ago. So it's, I think I've seen it actually grow in terms of responding to my needs as an individual who is self-employed and so on. So I'm truly honored that you are actually walking the talk and that you invited me to this conversation.
Yay!
Thank you.
Thank you so much. Veronica, any last words?
For me, it's obviously an interesting conversation, and as a bank, as someone who has been with the bank, and talking about the W initiative, there's a lot of opportunities that we have, a lot of offerings that the customers can enjoy. Women, let's come out, come and engage with us at the bank, and we'll definitely have something for each and every one. It may not be the village banking as we are speaking. It might be you are a woman with children. We've got products, we've got solutions. So be able to reach out to us, and we are here for you.
Okay. Thank you so much. Thank you, everyone that's been listening. This has been the W Conversations. My name is Kalumbu Nikosa Kearns, Head of Corporate Communications. We look forward to seeing you for the next one. Please like and share. And remember, these conversations are all about inspiring, connecting, and empowering women like you. Thank you very much.